Want to bring in Cowen Managing Director and Senior Analyst Jeff Osborne. He's actually got the lowest price target on the street for Tesla at this very moment. What is it?
Yeah, we're at 140, Andrew. So 100, based off of a multiple on 2021 earnings power.
And what do you think is going to have to happen between now and then for that number to be realized?
In terms of the price target, I think it's the profitless prosperity of the cars. Phil touched on it in his hit there. But right now they're essentially wrapping dollar bills on every car that they're sending out and not investing in the brand. So there's a whole host of problems. I don't dispute that the quarter will be pretty solid in terms of the delivery estimates. There's been a lot of leaks during the quarter, and so estimates have been raising throughout the quarter, which is nice to see. But it's certainly a mad scramble here at the end of the quarter to hit the estimates.
But put this quarter aside, what is going to happen in the second half that's going to get you to your $140 number? You know, there's been a lot of people who have been bearish about this stock, and and there's been a lot of volatility around the stock. You can even just look at that chart. And so, but to get to the price you're talking about, I think takes a real sort of sea change in the psychology of investors around Elon Musk.
Yeah, no, exactly. I think it's going to be margin pressure. They've been discounting the car. People are really going to see that now that the pent-up demand period is gone for the Model 3. We've had a 2.5 year waiting period, but Q3 will really be a litmus test as to what the true run rate of demand is. There's no longer a pent-up backlog. There's no new car to be sold. The tax credit in America gets cut in half. A whole host of issues. Plus, they need to finally start investing in service. You have a big debt payment due in November for the Solar City acquisition, and then early next year you're going to have to pay off that loan for the Chinese factory as well. So a bunch of cash is going out the door. Meanwhile, they're burning a bunch of cash, and margins continue to be under pressure. So I think people are going to see what the true long-term demand is. It's not 1 million vehicles a year like they claim, and it's nowhere near the mid-20s gross margin that they also claim.
And the robotaxis you don't believe are coming?
Certainly not next year. I think that maybe 10 years out, but there's a whole host of legal issues, city planning issues, insurance issues, a lot of false promises in that sector. I think it's just going to take some time.
Phil's in Chicago. Phil, jump in.
Jeff, I have a question for you regarding the federal EV tax credit. Starting today, it's been cut down to $1,875, 50% drop compared to the first half of this year. How much do you think that weighs on demand and sales in the second half of this year?
Yeah, I think it certainly will hurt the higher-end variants of the car. Certainly, some astute buyers were aggressive in trying to lock that in. You've seen subsidy cuts in other markets like Canada as well. So I think it did pull in some demand into Q2. But I think it's less of an impact to Tesla's naturalized demand, but it's more of a marketing tool that other OEMs, Phil, can use to as they launch their cars, whether it's Mercedes, Jaguar, Porsche, et cetera. None of the other OEMs other than General Motors are exposed to the cuts.
Jeff, what manufacturer do you think is going to take over the role that, I mean, in the EV space? Is there somebody else that you think is actually going to do so much better than Tesla? Because part of at least the bullish argument on Tesla has always been that there really is no genuine competitor yet.
Yeah, I think it depends on which segment of the market. So certainly S and X at the high end, the competition's fiercely coming, mainly from the European OEMs. As you look at sort of the $30,000 to $50,000 market, your point is spot on. Volkswagen's been very aggressive. Just last week, BMW pulled forward their electrification launch by two years in terms of them hitting their stride in earnest. So the competitive environment is intensifying now at the high end. Right. Certainly, the lower end will be more in the early 2020s, so you're a few years out. But Volkswagen would be the one I would keep my eyes on.
Jeff, I have one real quick question as an analyst. Did you feel any pressure, either from the company directly or just internally, about making a call like this? The reason I say that is because so many of the analysts, specifically around Tesla, are either bullish or flat. Very rarely have they been negative. In part, I think because people have gotten burned on being short in this company, and in part because I think there's an anxiety in the analyst community that if you're short the company, either you're going to lose access or there's going to be a credibility issue with the company, et cetera.
Yeah, I mean, the access with Tesla has been, relative to my 28 other companies under coverage, more on the limited side to begin with. I don't think that has anything to do with the rating. I think it's just due to the multitude of analysts that cover it and the CEO's personality and his positioning there. But certainly no pressure internally as to whether the rating is neutral, positive, or negative. We tend to take a long-term view with our coverage and, again, value things off of what it can look like a few years out in the future. And that's where I think things are pretty dire for Tesla.